First here, Bitcoin miner capitulation event may have already happened. Bitcoin miners may have already sparked a capitulation event. Fresh analysis hasn't concluded. In an update on June 24th, Julio Moreno, senior analyst at on-chain data firm CryptoQuant, hinted that the BTC price bottom could now be due. Since March 2020, miners have experienced a significant change in circumstances, from unprecedented profitability to tightened margins. The decrease to $17,600, which is 70% below November's all-time high for BTC USD, has adversely affected some players, as data now indicates that miner wallets are sending large quantities of coins to exchanges. This, as CryptoQuant suggests, appears to precede the final stages of the Bitcoin sell-off more broadly. This is in line with historical precedent, according to Moreno. This month, there has been a keen interest in miner sales, with the @Bitcoin Twitter account even describing the situation as miners being drained of their coins. As the situation in the crypto industry becomes ever more uncertain, miners are left to decide whether to stay or leave. This is a difficult decision, as leaving could mean missing out on opportunity, while staying could mean being stuck in a difficult situation. However, as Ki Young-ju, CEO of CryptoQuant, pointed out in a Twitter thread last week, the majority of miners remain active, as seen by network fundamentals remaining strong despite the current difficulties. According to CryptoQuant's Key, large volume entities bought up liquidity near $19,000 this week. This caused outflows from major United States exchanges, which reached their highest levels since 2013. Analyst Rect Capital argued that seller volume was still dictating market movements, despite some buyer volume present. This casts doubt on the strength of the overall market. Although spot prices for Bitcoin are currently around $2,000 below the 200-week moving average, this key support level has not seen significant interest from buyers yet. Current BTC buy-side volume is lower than the 2018 bear market buyer follow-through volume levels at the 200-week MA. He told Twitter followers that it is still lower than the March 2020 buy-side follow-through levels. More on that to come. Up next here, it seems NFT-themed Bored and Hungry restaurant no longer accepts crypto. Bored and Hungry, a burger joint that opened recently and is themed around NFTs, is no longer accepting cryptocurrency as a form of payment for food, according to a report from the LA Times on Friday. When questioned by the Los Angeles Times, one Bored and Hungry employee stated that they were not sure when the decision was made to stop accepting cryptocurrency as a form of payment, or if crypto payments would be making a return in the future. When Bored and Hungry initially launched back in April, one worker told the Los Angeles Times that the majority of customers didn't seem to care about crypto payment options, also noting that customers were generally indifferent to the restaurant's fidelity to the crypto cause. Another restaurant patron told the Los Angeles Times that people are not likely to use cryptocurrencies to make purchases because they are worried about the value of the currency fluctuating. Customer Richard Rubalcaba said that he does not understand how such a system would work given the instability of the market. Many patrons of the restaurant have stated that they are not particularly passionate about cryptocurrencies, but rather come for the food. Jessica Perez, one customer, said that she rates this up there with In-N-Out, maybe even better. That is setting the bar pretty high if you've ever had In-N-Out. When it comes to payment policies, it appears that the changes made by venues are in line with the cryptocurrency market crisis that is happening worldwide. However, there is no need to worry. Those who are still using cryptocurrency can still visit Chipotle, which started accepting crypto payments back in June via Flexa. At the moment, several countries are facing tough regulations and examination, and there are problems with the spread of crypto conditions. So, who's to know if this is going to come back, if this is going to be something that they just get rid of altogether? I think as the bear market turns around, more people are going to be willing to accept crypto. Just kind of the name of the game with how volatile the market is. Up next here, Celsius Network hires advisors ahead of potential bankruptcy. Celsius Network, a crypto lending platform, has reportedly brought on advisors from a management consulting firm in advance of the possibility that the company may go bankrupt. According to the Wall Street Journal, Celsius has hired an unknown number of restructuring consultants from the firm Alvarez and Marsal to advise the platform on potentially filing for bankruptcy. That's pretty unfortunate. This follows the early report from June 14th that said Celsius had hired lawyers in an attempt to restructure the company amid its financial issues. Celsius has been receiving significant attention from the media due to the volatility in the market caused by the platform's decision to pause all withdrawals, swaps, and transfers between accounts on June 12th. CEO Alex Mashinsky and other Celsius executives have been largely absent from social media since that announcement, with the platform announcing on June 19th that it would be suspending discussions on Twitter Spaces and AMAs to focus on addressing issues with its operations. State authorities have expressed concerns following the platform's decision to suspend withdrawals. On June 16th, Texas State Securities Board Director of Enforcement Division Joseph Rotunda told Cointelegraph that regulators in Alabama, Kentucky, New Jersey, Texas, and Washington were looking into the matter of the frozen accounts. An investor and co-founder of BNK to the Future has proposed a plan for the Celsius crypto lending platform to emulate Bitfinex's approach from 2016 in order to recover from recent market losses. Last November 2021, Celsius was valued at $3.5 billion after a $750 million Series B funding round. However, given the recent market downturn, this value may have decreased. So we will continue to keep you guys updated on Celsius. I know that's a huge point of contention here in the space. As we get new news, we will let you guys know how that turns out. Up next here, Bitpanda announces layoffs, citing no compromise on product quality. In light of the ongoing bear market, Austrian crypto and stock trading platform Bitpanda has announced mass layoffs in order to remain financially healthy. This move joins a growing trend among similar companies. Bitpanda has made the difficult decision to reduce its workforce to approximately 730 people in the wake of the recent bear market, which has led to catastrophic outcomes for many ecosystems, such as the depegging fiasco at Terra and Abracadabra's magic internet money. Having witnessed the crashes from a front row seat, Bitpanda has taken this difficult but necessary step in order to remain afloat. As of yet, the number of employees who have been asked to stop working for Bitpanda has not been made public. However, data gathered from LinkedIn points to approximately 277 full-time and part-time employees being laid off by the company. In its announcement entitled The Way Forward, Bitpanda supported the move to cut down employees, highlighting the need to be robustly well capitalized amid uncertain market conditions. It stated that it is a tough but necessary decision, and they are confident that the new organizational design will help them be more focused, effective, and stronger as a company. To support its former employees, the company is offering mental health support, references, and an employee assistance program, or EAP. It has been revealed that during its hyper-growth phase, when the crypto market breached the $2 trillion market capitalization, there were problems with internal processes and infrastructure that prevented successful onboarding of new joiners. They came to a point where having more people join stopped making them more effective, but instead created coordination problems, especially in this new market climate. In retrospect, they realized that the hiring speed was not sustainable and that was a mistake. At the time of writing, Bitpanda has not yet responded to Cointelegraph's request for comment. However, in light of the recent bear market, American crypto trading firm Coinbase has announced the closure of its Coinbase Pro services. So, that's unfortunate, not really unexpected in a market like this. A lot of companies are doing layoffs. However, I'm curious to know if they would go and join another crypto company, ones that are saying, yeah, we're going to continue hiring people on. I'd be curious to know how they feel about crypto companies as a whole, if they would continue on. A lot of them believe in the work, so they would possibly continue. So yeah, we'll see how that goes. Up next, Bitcoin network power demand falls to 10.65 GW as hash rate sees a 14% drop. The power consumption of the Bitcoin network fell sharply after the 2-week decline in the mining hash rate, according to this center here, Cambridge Center for Alternative Finance. As of 2022, the Bitcoin network has recorded the lowest power demand of 10.65 gigawatts compared to its peak of 16.09. This data was shared again by the Cambridge Center for Alternative Finance. In an exclusive interview with Cointelegraph, IT engineer, cryptographer, and consultant Michelle Kazaka stated that the banking sector utilizes 56 times more energy than the Bitcoin ecosystem. He went on to say that Bitcoin Lightning is a brilliant, efficient, and powerful technological solution that deserves to be adopted on a large scale. The recent reduction in Bitcoin's power demand can be attributed to the decline in the mining hash rate. The mining hash rate is a key security metric representing the computing power required by BTC miners to successfully mine a block. On June 13th, Bitcoin's mining difficulty reached reached an all-time high of 231.428 exahashes. This was followed by a drop of over 13.9% over the next 2 weeks. The latest breakdown of the hash rate distribution shows that F2 Pool and Ant Pool are the biggest known miners, each mining 81 and 80 blocks over the last 4 days, respectively. A group of researchers under federal funding have designed a class of stablecoin dubbed the electricity stablecoin, or e-stablecoin. This innovative new coin would transmit energy as a form of information, providing a much-needed stability to the cryptocurrency market. Cointelegraph explains that the e-stablecoin would be minted through the input of 1 kilowatt hour of electricity plus a fee. This coin could then be used for transactions the same way as any stablecoin. That's pretty interesting. We will continue to keep you guys updated on that as well. If we hear any more news on the e-stablecoin, that's the first I've ever heard of it. And last but not least here, Axie Infinity to compensate Ronin exploit victims and relaunch Bridge. Sky Mavis, the creator of the play-to-earn game Axie Infinity, announced that it will reimburse victims of the Ronin Bridge hack and reopen the bridge next week. In March, a group of hackers stole more than $620 million in cryptocurrency tokens. Once the bridge is reopened on Tuesday, users will be able to withdraw 1 ETH for each one they possessed before the attack. That is pretty generous of them, and it's awesome they are able to financially do that, especially in this market. In April, Cointelegraph reported that Sky Mavis had closed $150 million in fresh capital led by Binance to refund hack victims. Among the investors during the funding round were Animoca Brands, 16Z, Dialectic, Paradigm, and Axel. The hackers' activities soon after the breach underscore a significant issue for the DeFi industry, which has faced losses of more than $1.22 billion this year. By moving the stolen assets around and using Tornado Cash to conceal their tracks, the hacker has made it difficult for DeFi to recover. The Ronin hack was a major event that caused shockwaves throughout the cryptocurrency industry. Despite this, the Ronin blockchain was not deterred in its mission to achieve significant milestones. The blockchain has seen great success with non-fungible tokens, with sales volume surpassing $4 billion. It remains a popular choice for digital collectibles due to its reliability and security. In terms of all-time NFT sales volumes, it is second only to Ethereum. It beats out Solana, Flow, Polygon, Wax, and many others. Hacking, rug pulling, and protocol flaws are all too common in the cryptocurrency industry. It seems like not a single day goes by without news of another hacking. That is for sure true. On Friday, Cointelegraph reported that the Horizon Bridge to the Harmony Layer 1 blockchain had been exploited, resulting in $100 million worth of altcoins being swapped for Ether. According to Immunify, cybercrime losses reached a staggering $10.2 billion in 2021. It is unfortunate. Hopefully these projects, these platforms continue to bolster up their security so that these things happen less and less more frequently. But that is all we have for you today. Thank you guys so much for watching. Make sure to like, subscribe, hit that notification bell, leave a comment what you want to see in a future video, and we'll see you next time.